What if I told you that the difference between a profitable trader and a losing one isn't strategy, it's psychology? That the strongest edge in the market isn't a pattern or an indicator, it's emotional control? Welcome to the Stoic Trader series, where we dive into the mindset that separates impulse from intelligence. If you're tired of letting emotion sabotage your trades, stay with me till the end. This may just rewire your entire philosophy of trading. In trading, we are often told to stick to the plan. But very few tell us what actually breaks that plan. Emotion. You can have the best strategy, a solid risk-reward setup, perfect technical analysis, and still lose. Not because the system failed, but because you did emotionally. Here's where Stoic philosophy becomes relevant, not just as a life concept, but as a psychological trading edge. The Stoics believe that emotions cloud judgment, and that wisdom lies in responding, not reacting. Now, let's look at trading through that lens. Most traders know what to do, but when real money is on the line, their execution breaks down. Why? Because the moment your money enters the market, your biology fights your psychology. Your brain becomes wired for fear when you see red. Dopamine hijacks your logic when you see green. These emotional spikes activate survival instincts, not rational thought. And the moment you're in survival mode, discipline dies. A Stoic trader doesn't suppress emotions. He understands them. He knows that the fear of missing out, FOMO, the thrill of revenge trading, or the panic of a drawdown, are all illusions that feel urgent, but are never useful. Stoicism in finance is not about being cold or robotic. It's about mastering the space between stimulus and response. The market moves. Your system gives a signal. You feel fear. But instead of reacting impulsively, you pause. You breathe. You observe. Then you act with intention. That tiny moment of self-awareness, that's where consistent traders live. That's a philosophy of trading, not chasing results, but refining decisions. Not seeking control over outcomes, but mastery over oneself. Let me put this in perspective. Imagine two traders. Both know technical analysis. Both know risk management. But one loses consistently while the other grows slow but steady. Why? Because the losing trader lets his internal storms override his edge. He enters early out of anxiety. He exits early out of fear. He flips his bias out of desperation. Every trade becomes a reflection of his emotional instability. The Stoic trader? He treats every trade as a test, not of the market, but of his own mind. He's not chasing money. He's pursuing mastery. And mastery requires emotional discipline. Let's be clear, trading psychology is not just a buzzword. It's the foundation. If your emotions are not in check, your strategy is irrelevant, because you won't follow it. Now think about your last 5 losing trades. Were they based on poor analysis or poor impulse control? Most likely, the answer is the latter. This is why emotion is the enemy of consistency. Emotions fluctuate. They react to short-term data. But consistency requires long-term thinking. It requires sticking to your process even when it feels wrong, especially when it feels wrong. Here, the Stoic principle of Amor Fati becomes useful. Love your fate. In trading terms, this means accepting every outcome, win or loss, with equanimity. The Stoic trader doesn't get too high on wins or too low on losses. He understands that every trade is just a data point, not a verdict on his worth or intelligence. He doesn't trade to feel smart. He trades to grow wise. Stoicism teaches us that we must observe our emotions, but never be ruled by them. In finance, that translates to being able to watch your P&L fluctuate without letting it alter your strategy. It's the ability to sit on your hands when everything inside you wants to act. That is true strength, not in action, but in restraint. True consistency in trading is born from psychological neutrality, a mindset where every trade is treated the same, regardless of its result. And that neutrality can only come when emotion is depowered. So, if you truly want to level up as a trader, don't just study charts. Study yourself. Journal your reactions. Reflect on your fear triggers. Build rules to protect yourself from yourself. Because the real battle isn't with the market. It's with your own mind. And the one who masters that becomes a Stoic trader. In trading, almost everyone begins by asking the same question. Where's the market going next? It's a natural question, and also the wrong one. The market is not predictable. It never was. It never will be. And yet, most traders spend the majority of their time trying to forecast the next move instead of preparing their own. The obsession with prediction is rooted in control. The human mind hates uncertainty. So, when faced with randomness, we try to outguess the system. But what if the real edge isn't in knowing what happens next, but in knowing how you respond no matter what happens? This is where Stoic discipline becomes a superpower in trading psychology. The Stoics taught that we must differentiate between what is in our control and what is not. In trading, the only things within your control are your preparation, your execution, and your response. Everything else, price action, volume spikes, news events, lies outside your domain. Prediction makes you reactive. Discipline makes you consistent. When a trader operates from a place of prediction, every move becomes emotionally charged. If the market goes the wrong way, frustration builds. If the prediction turns out right, ego inflates. But in both cases, you're no longer in control. You're being moved by the market, not moving within it. Your identity becomes attached to outcomes instead of behaviors. The disciplined trader sees the market differently. He doesn't ask what will happen next. He asks, what will I do if it happens? His power lies in preparation, not clairvoyance. His trades are not based on hope or gut feeling, but on a thin logic grounded in back-tested rules and emotional neutrality. This is the core of Stoicism in finance, to move from reaction to intention, to stop chasing certainty and start building structure. Because markets don't reward predictions. They reward repeatable behavior under pressure. The philosophy of trading, when viewed through a Stoic lens, isn't about winning trades. It's about winning the inner game. The market tests you every day. Will you follow your system when it feels uncomfortable? Will you stay out when your ego begs to jump in? Will you take a small loss or let it bleed into a disaster because you know it's going to reverse? Discipline is not glamorous. It's boring. It's repetitive. It means taking the same trade set up 100 times, win or lose, because that's your edge. It means saying no more often than saying yes. It means having a trading plan and actually following it, even when it goes against your instincts in the moment. But here's the paradox. The more disciplined you become, the less emotional the market feels. You stop chasing trades and start managing them. You stop thinking like a gambler and start acting like a strategist. You stop needing to be right and start needing to be consistent. And consistency is where the compound growth lives. Many traders think that strategy is what makes you profitable. But a flawed strategy with discipline often outperforms a brilliant one without it. Why? Because discipline leads to execution fidelity, doing what you said you'd do, over and over again. It removes randomness from your side of the equation. It reduces self-inflicted losses. And that's the difference between someone who survives a market and someone who becomes a statistic. Think about this. The market doesn't punish your predictions. It punishes your lack of discipline when your predictions fail. Everyone will be wrong sometimes. That's part of the game. But the traders who blow up are the ones who can't accept being wrong, who double down, who widen their stops, who break their rules in moments of emotional discomfort. The Stoic trader doesn't resist being wrong. He embraces it as part of the process. He plans for it. He sizes for it. He journals it. Because his success is not measured by how often he's right, but by how rarely he breaks character. Stoicism reminds us that control is not power, self-control is. In trading, this means letting go of the illusion that we can know the future, and instead anchoring ourselves to principles that don't change even when the market does. The goal is not to predict the storm, but to be the kind of sailor who can survive it. So if you're truly serious about becoming a professional trader, shift your mindset. Stop looking for the next hot strategy or magical indicator. Look inward. Ask yourself, am I someone who follows rules under pressure? Because that's the real skill. That's the real alpha. That's what separates a trader from a gambler, and a stoic from a slave to emotion. The market is chaos. But you can be calm, structured, and steady. That's the edge no one talks about. Discipline over prediction. Every single time. Every trader begins with one goal, to make money. But the more you chase that goal directly, the more it slips from your hands. Because in trading, outcomes lie outside your control. The market doesn't owe you profits. It doesn't reward you for effort. It doesn't care how long you've been studying or how much you've risked. That's the brutal truth. And if your emotions are attached to outcomes, you're already set up to lose. This is where Stoic philosophy cuts through the noise. The Stoics taught one of the most powerful psychological ideas in human history, that fulfillment and mastery come not from controlling what happens, but from controlling how you act, regardless of what happens. Translated into trading terms, it means this: detach from the result and attach to the process. Most traders are outcome obsessed. They measure their worth in P&L. A green trade makes them feel confident. A red one makes them doubt everything. But this is a mental trap because it links your emotional stability to randomness. You start evaluating yourself based on something that's inherently volatile. And over time, this emotional roller coaster breaks your discipline, clouds your thinking, and kills your edge. A Stoic trader sees the game differently. He understands that results are noisy, but process is truth. He knows that one good trade can lose money and one bad trade can make money. The outcome doesn't define the quality of the decision. Only the process does. When you're truly process-oriented, you start asking the right questions. Not, did this trade make money? But, did I follow my plan? Did I honor my stop? Did I manage my risk? Did I act with discipline, even when it was uncomfortable? These questions build mastery. These questions build consistency. These are the questions that make you a trader, not just someone placing bets on a chart. In this mindset, every trade becomes a test of character. Win or lose, the only thing that matters is, did you act according to your principles? This is a philosophy of trading. It's not just about technical skill. It's about mental alignment with your own rules, day after day, candle after candle. You don't measure progress by profits. You measure it by how well you stuck to your process, even when it didn't reward you immediately. That's what separates professionals from emotional traders. Professionals don't celebrate every win or mourn every loss. They review execution. They optimize systems. They detach. Why is this detachment so powerful? Because when you're no longer emotionally enslaved by results, you think clearly. You wait patiently. You stop trying to force trades. You allow the market to come to you. That's when your trading evolves from reactive to intentional. And ironically, that's when the money starts coming in, not because you're chasing harder, but because you're no longer chasing at all. You become the kind of trader the market can't easily shake. Common wins, common losses. Grounded, detached, disciplined. There's a Stoic principle that says, do your duty and let go the rest. In trading, your duty is execution. Entries, exits, sizing, risk. That's it. The result of the trade? That's the rest. Let it go. You followed your edge? That's a good trade. Period. Even when the market punishes you, you stay aligned. Because your self-worth is no longer attached to the outcome. It's tied to your process. You don't need validation from profits. You find power in how you show up, consistently, professionally, and without ego. Imagine two traders again. Both take the same loss. One spirals into revenge trading, over-trading, emotional panic. The other logs a trade, reviews the setup, and moves on. Who has the edge? Not the one who predicts better, but the one who processes better. The one who has trained his mind to focus only on what he can control and let go of the rest. That's Stoicism in finance. That's what makes a Stoic trader dangerous in the best way. Not because he wins every trade, but because he cannot be broken by a single one. The losses don't shake him. The wins don't blind him. He just keeps showing up, candle by candle, with the same quiet resolve. So if you're struggling with inconsistency, with emotional swings, with self-doubt every time you lose, stop focusing on your results. Start building your process. Create a clear system. Define your edge. Set rules. And then, more importantly, live by them, relentlessly. Your value is not in your last trade. It's in your ability to keep showing up like a professional, regardless of the outcome. Let go of needing to win. Let go of fearing a loss. Learn to act without attachment. That's where true psychological freedom begins. And that freedom, it's your ultimate trading edge. Detached from outcome, attached to process. That's how you become the Stoic trader. In every trade you take, there's more than just price action at play. There's a silent force working behind the scenes. Your own psychology, your beliefs, your fears, your impulses, and your unconscious patterns are always present, whether you acknowledge them or not. And the greatest mistake traders make is thinking they are trading against the market, when in truth, they are trading against themselves. This is why in both philosophy and trading, one truth stands above the rest. Know thyself. This ancient phrase, carved into the temple of Apollo at Delphi, was a cornerstone of Stoic thinking. And in modern trading, it may be the most overlooked edge of all. You can master charts. You can memorize every candlestick pattern, every Fibonacci ratio, every economic release. But if you don't understand how you behave under pressure, how you react to fear, to boredom, to drawdowns, then all that knowledge is like a sharp sword in the hands of someone half asleep. The market has a way of exposing your weaknesses with surgical precision. If you're impatient, it will tempt you to jump in early. If you're greedy, it will show you a setup that looks too perfect and pull you in with oversized risk. If you're a perfectionist, it will taunt you with minor losses until you sabotage yourself trying to get it right. And none of this can be fixed with better strategies. It can only be fixed with better self-awareness. This is where the Stoic trader builds his real edge, not by obsessing over price, but by studying the patterns within himself. He journals not just the trades, but the emotions behind them. He tracks his impulsive decisions. He notices when he trades out of frustration or boredom. He reflects on what triggers his fear of missing out, his hesitation, or his overconfidence. He knows that understanding his psychology is not optional. It is essential, because in trading, the market doesn't kill you. You kill yourself with your own habits. The Stoic understands that self-mastery is the only way to build market mastery. And that can only come by turning inward, not once, but daily. The philosophy of trading isn't just external. It's an inner journey, a mirror that reflects everything you try to hide from yourself. Your impatience, your ego, your need to be right. The market doesn't care about any of these, but it uses them against you. And if you're unaware, you'll keep repeating the same cycle, blaming volatility, blaming setups, blaming news, when the real issue is within. A Stoic trader takes responsibility, radical responsibility. He doesn't blame the market for his mistakes. He sees every loss as data, every error as feedback, every tilt as a signpost pointing towards something deeper that needs to be understood. Self-knowledge is the beginning of emotional discipline, because when you know your tendencies, you can prepare for them. You can build rules around your weaknesses. You can automate systems to protect you from your worst moments. You can trade with clarity, not because emotions disappear, but because they no longer control you. And over time, this level of awareness creates something priceless. Consistency, because you're no longer changing systems every week out of frustration. You're no longer making revenge trades to feel better. You're no longer confusing volatility with failure. You've learned to sit with discomfort. You've trained your mind to accept uncertainty. You've made peace with being wrong, not because it feels good, but because it's part of the process. This mindset is rare, but it is powerful. It's what allows the Stoic trader to keep showing up regardless of the market conditions. It's what allows him to survive losing streaks without crumbling, to grow steadily over years instead of burning out in months. His edge is not fragile, because it's not built on prediction. It's built on inner alignment. This is why trading psychology isn't a side subject. It is the subject. Your mind is your workspace. Your thoughts are your tools. Your emotions are your environment. If these are chaotic, no system will save you. But if these are clear, even simple strategies can work with precision. So the next time you lose a trade, pause. Ask yourself not what went wrong with the chart, but what went wrong inside me. Was I impatient? Was I afraid? Was I trying to prove something? Was I ignoring my rules because I felt like this time was different? These are the questions that lead to growth. These are the questions that separate amateurs from professionals. Because in the end, the true battle isn't on the screen, it's in your mind. The real edge isn't out there, it's within. And the only way to unlock it is through ruthless honesty, daily reflection, and an unshakable commitment to knowing yourself more deeply every single day. Know thyself, study thyself, master thyself. That's the Stoic trader's way. In the end, trading is not just a financial journey. It's a psychological and philosophical one. It doesn't just test your technical skills. It tests your character, your patience, your ability to remain calm while the world screams at you to react. And most traders fail not because the market is too wild, but because their minds are too undisciplined. What Stoicism teaches us, and what the great traders eventually realize, is that the market doesn't need to be controlled. You do. The real enemy is not volatility. It's impulsiveness. The real challenge is not prediction. It's emotional discipline. The real breakthrough is not in mastering charts. It's in mastering yourself. Detach from outcomes. Attach to the process. Let go of the need to be right, and embrace the need to be consistent. Build rules that protect you from your own weaknesses. Journal your emotions as often as your trades. And above all, know thyself, because in that self-awareness lies your edge. The Stoic trader doesn't chase profits. He chases clarity. He doesn't seek control over the market. He seeks control over his own mind. And when you begin to live by these principles, not just in your trades, but in your thoughts, something shifts. You stop fighting the market, and you start flowing with it, not emotionally, but intentionally. That's the path. That's the philosophy. That's the Stoic trader.